Hey everyone, welcome to another deep dive. Today we're taking a value investing approach to SoFi Technologies,
SoFi, yeah.
trying to figure out, is this a hidden gem or just another one of those overhyped fintech stocks you see?
Yeah.
We're going to unpack all of that today. And, by the end, you might be wondering if traditional banks even have a future. Who knows?
I think it's interesting that SoFi, they're trying to bridge the gap between traditional banks and the whole digital world we live in now.
Right.
And they're going for the whole financial ecosystem approach, not just offering individual products.
They do have a lot.
Yeah, very bold.
Everything. Everything from, refinancing student loans
Yeah.
to investment platforms, even career coaching.
Yeah.
So from a value investing standpoint, is that a good thing to be so diverse? Or does that make them, spread a little too thin?
That's the interesting part, right? And when you look at it from this value investing angle,
Yeah.
on the one hand, being this one-stop shop, that could be a big differentiator for them. Think about it. Traditional banks, they kind of silo everything.
Right.
SoFi's integrated approach, that could create this powerful network effect. And we're going to talk about that.
Yeah.
The more products a customer uses, the more likely they are to stick around. That's super valuable for a company.
I could see that. It makes sense from a customer acquisition retention standpoint.
Yeah.
But this is the financial services industry. This is not an easy place to just jump into. It's a really tough nut to crack.
Very true.
Huge regulatory hurdles, right?
Oh, yeah. Sure.
You've got these established players with tons and tons of money.
Deep pockets.
How do you even compete?
That's what every value investor has to consider. It's so competitive.
Yeah.
You're talking about, battling giants like Mizuho Financial Group.
Right.
But you also have these nimble startups like Upstart and NU Holdings. They're all over the place. You need so much capital just to get started in this industry.
Yeah.
Regulatory compliance is a nightmare. Getting financing is difficult.
So how does SoFi set themselves apart in this market? What makes them a potential value play?
Yeah, that's the big question, right? The million-dollar question.
Right.
There are a few factors that make them attractive to a value investor. Their brand strength is notable.
All right.
They've built this reputation for focusing on the customer, on the experience. And, their early adoption by higher income borrowers, that's given them some credibility.
They have that cool factor almost.
Right, exactly. And then thinking about cost, their digital-only model is a big advantage. They don't have to maintain physical branches, so they can offer better rates and fees potentially.
Makes sense.
Yeah.
So the brand cost structure seems promising.
Yeah.
What else do they have going for them from a value investing angle?
Well, remember the network effects we talked about?
Right, yeah.
The more someone uses SoFi's ecosystem, the more valuable they become to the company.
Okay, that makes sense.
And they've been making some strategic acquisitions like Galileo. It's this tech platform that powers other financial institutions.
Really?
And Technices. It helps them assess credit risk using AI. Those
Yeah.
are unique assets that could mean big growth, big profits in the future.
So they're playing the long game. They really want to be a big part of the financial landscape.
Yeah, definitely.
We've got to talk about the leadership, though. You can have a great business model, but if the management's not good, it can all fall apart. Right?
Absolutely. You're absolutely right. Evaluating the leadership is key for any value investor.
Absolutely.
And in SoFi's case, you have Anthony Nato, the CEO.
Okay, yeah.
Impressive finance background, took Twitter public.
Oh, wow.
He's been guiding SoFi through some rapid growth and some big challenges,
Yeah.
like the student loan moratorium.
Right.
So he's been tested. That's a good sign.
Yeah, battle tested.
Yeah.
Okay, so what about their approach to capital allocation? Where are they putting their money? That's something any value investor is going to want to know.
Exactly. It's a very important question. They're focusing on three main areas: expanding their core business with new products and services,
Okay.
strategic acquisitions, like they bought Wyndham Capital Mortgage to beef up their mortgage offerings,
Right.
and building their brand through targeted marketing.
So it sounds like they're being pretty strategic,
Yeah,
prioritizing that long-term growth over short-term gains.
absolutely.
What about things like share buybacks, dividends? Are they giving back to shareholders?
That's important to think about.
Yeah.
So far, SoFi has not done stock buybacks or paid dividends. They're putting profits back into growth. That could be good, could be bad, depends on how you look at it.
Right.
As an investor.
Depends on your perspective.
Yeah.
Okay. So we've got a good sense of the business model, the leadership. Now we've got to dive into what really matters for value investors? The financials.
Number.
What are the numbers telling us?
Let's look at some key metrics. SoFi's market cap right now is $17.71 billion.
Okay.
And their price to earnings ratio, the PE, is 103.5x.
Whoa.
Now, for a value investor, that high PE might be a little concerning.
Well, high.
Yeah. It suggests investors are expecting big growth down the line. Are those expectations realistic?
That's the question. Right?
Yeah. Well, the good news is SoFi has been showing impressive revenue growth year over year, around 26%, according to the latest data.
Oh, wow.
And their profitability is improving. Their net margin is 18.64%. That means for every dollar of revenue, they're turning almost 19 cents into profit. It's pretty good.
That's healthy, yeah. But are there any red flags in the financials that, a value investor would be concerned about?
Well, there are always things to watch out for. One thing is their operating expenses. They were pretty high last quarter.
Okay.
If they can't control those costs, it could hurt their profits.
Right.
And their net interest margin, it's been shrinking. That could mean their lending business is facing some challenges.
So there are potential risks there.
Yeah.
But overall, is their financial health strong enough to justify that high PE ratio?
It's a mixed bag. They are more financially stable now, but their earnings have been a little volatile in the past.
Okay.
That recent $5 billion loan platform business contract is a good sign.
That is, yeah.
But they are still very reliant on the lending segment, which means they're vulnerable if the economy takes a downturn.
Right.
A value investor really needs to think carefully about all these factors.
Okay. So we've got the business, the leadership, a glimpse into the financials. But now we need to zoom out a bit.
Yeah.
What's the market saying about SoFi? And what about their ownership structure? Those are really important pieces of the puzzle for any investor, especially someone looking for value.
You're absolutely right. Let's take a look outside of SoFi's internal workings and see what the market thinks.
Okay, great.
Sounds good.
We'll be back to that after a quick break. Okay, so we've dug into SoFi's business model, leadership, and financials. Now let's zoom out a bit and see how the market perceives their value. What's the overall sentiment surrounding SoFi?
Well, generally it's positive.
Good.
Investors seem to be recognizing SoFi's potential for growth. Their financial performance has been strong, and they've got this innovative approach to finance.
Sounds good. But I'm sure there's some skeptics out there too.
Oh, of course.
Are there concerns that a value investor might have?
Yeah, there are always different viewpoints. Some analysts, they're a bit worried about SoFi's valuation.
Okay.
Remember that high PE ratio?
Yeah.
It makes some people wonder if the stock's overpriced based on their earnings right now. They question if SoFi can actually reach those ambitious financial targets.
That's a fair point. It's always that balance between growth and profitability, right?
Exactly.
Do the sources we looked at, do they offer any insights into how SoFi plans to address that?
Yeah, they actually do. SoFi talks about their financial services productivity loop. They call it FSPL. Yeah, FSPL. Basically, it's a strategy where they target high-income borrowers with good credit scores.
Okay.
The idea is that this reduces their risk and boosts profitability.
That makes sense. But it seems like they're putting a lot of emphasis on one specific segment of the market. What if that segment shrinks or competition heats up?
That's a good point. It's something any value investor would need to think about. Diversification is important.
Right.
And SoFi knows they need to grow beyond their core lending business.
Yeah.
They're looking at fee-based revenue streams, things like their B2B services through the Galileo platform.
Oh, right.
That could make them less reliant on lending.
It sounds like they're making some smart moves.
Yeah.
But the market can be so unpredictable. What about their stock price? How volatile has it been? That can make or break a value investment.
You're right. Volatility is a big factor. SoFi's stock, it's had some swings recently.
Okay.
And if you look at analysts' price targets, they're all over the place. Some say $5, some say $20. The average is around $13.50.
Wow, that's a wide range.
Yeah,
Seems like there's a lot of uncertainty about their future.
there is.
What about their ownership structure? Does that give us any clues about investor confidence?
Well, it's an interesting mix. You've got institutional investors, insiders, and retail investors.
Okay.
But what's interesting is that institutional ownership is going up.
Really?
Yeah, the big players like hedge funds, pension funds, they're buying in. That often means they have confidence in the company's long-term prospects.
That's a positive sign. Those guys usually do their research before making big investments. But before we get too optimistic, we can't forget about the risks. Every investment has them, and value investors need to understand them.
Definitely.
How about we do a SWOT analysis? Strengths, weaknesses, opportunities, threats. It's a classic way to assess a company's overall position.
Love it. A SWOT analysis can help us organize everything and see the big picture. Okay, starting with strengths, we've already talked about a few. Their brand is strong, they have cost advantages because of their digital model, potential for those network effects to really take off, and their focus on financial health, which sets them apart from traditional banks.
Yeah, those are some solid advantages. What about their weaknesses? No company is perfect, and value investors need to know what those weaknesses are.
Of course. One weakness, we mentioned it earlier, is their operating expenses. If those costs get out of control, their profitability will suffer.
Makes sense.
And as we said, they rely heavily on the lending segment, which makes them vulnerable to any economic downturns.
Okay, so some potential headwinds there. But every challenge can also be an opportunity. What are some ways that SoFi could capitalize on the changing financial landscape?
They have a lot of room to expand. They could grow those fee-based revenue streams, develop their B2B services through Galileo even further, and potentially gain market share as traditional banking continues to change. The fintech market is ripe for disruption, and SoFi seems well-positioned to take advantage of that.
That's an exciting prospect. But what about the threats? The financial world is full of them.
It is. Increased regulation is always a concern for fintech companies. Competition is fierce, and we've already discussed how economic downturns could impact their lending business. Plus, there's that recent CFPB lawsuit alleging that they misled customers about student loan savings.
Ah, yes, the legal stuff. Always unpredictable. So, taking everything into account, the strengths, weaknesses, opportunities, and threats, where does SoFi stand from a value investing perspective?
It's complicated, but I think SoFi has the potential to be a good value play. They've successfully become profitable, which is encouraging, and their FSPL strategy is smart, though it does have some risks.
Right. So much depends on that strategy working out the way they expect. You mentioned a provocative thought earlier, something that could make us rethink traditional banking. What was it?
The question every value investor should be asking about SoFi is, could they become the super app of finance?
Wow, that's a big statement. What makes you think that's even possible?
Think about it. They're already a one-stop shop for a bunch of financial products.
Right.
They're constantly innovating, expanding their services, and building a loyal customer base. And they're integrating financial education and personalized advice into their platform. Traditional banks aren't doing that.
It's like they're building this financial ecosystem. It's not just about transactions. They want to empower people to take control of their money.
Exactly. And that's where the real disruption is. Traditional banks are slow to change, and people want more convenient, more personalized financial solutions. SoFi is in a perfect spot to take advantage of that.
That's a very interesting argument. But becoming a super app, that's a tough goal. What would it take for SoFi to pull that off?
Well, they'd need to keep executing their vision flawlessly. Attract and keep the best people, navigate the constantly changing regulations, and fight off competition from both the big players and the new startups.
Oh, a lot of things have to go right.
Yeah.
But if they do manage to achieve it, what would that mean for the financial industry as a whole?
It would be a huge change. Imagine all your financial needs met in one place, one platform. Banking, investing, loans, insurance, all of it right there.
That would change everything. Even if they don't become the super app, it sounds like SoFi is a company worth keeping an eye on.
Absolutely. They're pushing the boundaries of what's possible in finance. It'll be interesting to see what they do next.
Well, everyone, we've covered a lot of ground in this deep dive into SoFi Technologies. We looked at their business model, leadership, financials. We even talked about their potential to become the super app of finance.
We've examined market sentiment, ownership structure, and done a thorough SWOT analysis to see the risks and opportunities.
But the real question is SoFi a good investment?
That's for you to decide. We've given you the information, the insights, the context. Now you have to weigh the evidence and make a decision that works for your investment goals and how much risk you're comfortable with.
Well said. If you want to dig deeper, check out the episode description. We got links to all the sources we mentioned.
And if you found this deep dive helpful, subscribe to the Stock Analytics AI YouTube channel for more insights like this.
We put out new videos all the time, covering lots of different investing topics, all powered by data and AI.
And a quick disclaimer, as always, this deep dive is just for informational purposes. It's not financial advice.
Investing has risks. It's important to do your own research before making any investment decisions.
Thanks for joining us on this deep dive.
And remember, the world of finance is always changing. Stay curious, stay informed, and never stop learning.